The most common question that I get is, how do I learn how to trade? Beginners are presented with this huge new world to learn about, and they don't know where to start. Given that that question is asked so often, you'd think that there would be plenty of satisfactory answers out there, but clearly that's not the case. Otherwise, you wouldn't be here. So what's the deal? Why is it so hard to find solid information about how to learn trading? Well, trading is exceptionally competitive, and that changes things. Trading on an edge eliminates that edge, so you can't just follow some simple set of steps. Otherwise, everybody would already be doing it, and that edge would already be taken out of the market. So you have to be doing something that is more complicated and difficult for other people to reproduce. Markets can also just be very random, which can fool us. So there's a lot of people out there that think they have it figured out when really they're just spreading noise. So how do we deal with this issue? Well, I've been developing new traders through this channel for quite some time now, and there is a solution. The approach that I've found gives you the best start is to focus on developing trader intuition that is backed by empirical data. Okay, let me explain what I mean. So let's look at learning something else, like learning how to cook. Maybe you start with a couple of beginner recipes that teach you the basics, or maybe you focus on essential skills like how to chop things, etc. In the beginning, you're just following step-by-step instructions. As you level up though, you'll not only develop an understanding for why we cook the way that we do, but you'll develop a feel for what works and what doesn't work. Pretty soon, you'll start making recipes on the fly. Like, think of Remy the Rat in the movie Ratatouille. He doesn't have to think about it, he just knows what flavors will work together. That is intuition. You know what to do without having to use conscious reasoning. It becomes second nature or instinct. Now, it's easy to see how such intuition can be ideal for trading. Being able to make incredibly sophisticated decisions in an instant is a skill that is not easily duplicated. Our intuition can also be particularly good at using a really large number of inputs to make decisions, as well as working with sparse or incomplete information. Of course, there are caveats, things about trading that intuition doesn't handle very well. Luckily, we can account for these things in how we develop our intuition. Now, when you use intuition, what's really going on is you're using the more advanced frontal cortex parts of your mind. You might also hear people refer to it as System 1, which comes from the book Thinking Fast and Slow. Think of it like a super advanced ChatGPT that we all have in the front of our brains. Our brains and ChatGPT use the same basic principles. They're both neural networks. So in a neural network like ChatGPT, you have a bunch of nodes that can change both the functions they perform and how they connect to each other. And then what you do is you pass training data into that network. From there, the network aligns itself based on the reinforcement that it gets. So for instance, at OpenAI, they have a whole army of people whose whole job is just looking at ChatGPT's responses and rating those responses to give it that reinforcement. Our brain works in much the same way. It's just those nodes are actually brain cells that are constantly growing, pruning, and refining the neural network. This is why intuition works the way that it does and can make incredibly complicated decisions almost instantly. All of the complexity has been grown into the actual structures of the brain itself, and we don't necessarily consciously understand how we're getting the answers that we do. The brain just spits the answer out. And this is the key insight that we need in order to consciously develop better trading intuition. Realizing that when we're developing intuition, we are literally developing new connections in our brains. So with that in mind, here's a framework that you can use to consciously develop trader intuition. Number one starts with health. This is an actual physical biological process that we're talking about. So all of your standard health recommendations apply here. You need to get proper nutrition, adequate physical exercise, and most importantly, get good sleep. Really though, the sleep part is the most important. Have you ever had a hard time understanding or remembering something and then you slept on it and then you have no problem the next day? That's your brain solidifying what it's learned that day into new nerve connections while you sleep. sleep. Even the dreaming process plays a key role in developing that neural network. So getting adequate sleep will do more for your trading than almost anything else. And I know it's tempting to stay up all night and trade cryptocurrencies, but really, you need to sleep. Number 2 is we need the right goals and reinforcement. So a key part to how neural networks development is the reinforcement that the network gets. Having the wrong goals can easily lead to intuition that is overfitted and ultimately leads us into a dead end. And the best goals aren't always the most obvious ones either. For instance, you're probably thinking that your goal should be whether or not you made money, right? Well, there's a lot of randomness to what makes money in the market. So what I recommend for day trading is that your goal should be to predict future orders. That will help you sidestep a lot of the pitfalls in trading and focus on things that actually matter. Number 3, quality data. A neural network is only as good as the data input into it. If you put junk data into the network, you're going to get junk results out. So for instance, there's been this problem with large language models where researchers tried to train them on internet data, some of which was generated by other large language models. So the LLMs get progressively worse and worse as there's less and less quality data to train them. We're no different. If you are watching things that are random, then your intuition is going to become random as well. This one is probably the biggest thing holding retail traders back. If you spend all of your time looking at a random line, and you gotta be honest with yourselves, guys, most of the time it is just a random line. And if that's all you're looking at, your intuition will be random as well. And there's a real permanent cost to this as well, because again, you're building physical connections in your brain that don't necessarily go away. So if you change things later, you're gonna have to completely reprogram that intuition. And that is very difficult to do once you've already built that network. Not to mention that you've lost all of this time that you could have spent looking at things that matter. So it is important to watch what information you consume, because everything that you are looking at can potentially be factored into that model being built in your mind. Don't just add an indicator to your charts because it looks cool. We should have good reason to believe that what we're looking at matters, and not just some guy on the internet saying, "Trust me, bro." That backing preferably should come in the form of empirical evidence. So what is some data that we know that matters? Well, it comes back to that goal that we talked about, predicting future orders. We want to see empirical evidence that the thing is effective at predicting future orders. So some ideas that you can look at include things like seasonality, economic reports, breaking news, market sentiment, or more generally, you want to know what's going on in the market and in the business. I've had many experiences speaking with day traders that have had decent success in the past and trying to figure out where their success comes from. I often found that they would do things that completely contradicted what they thought the source of their edge was. Yet every one of these people I met knew things about the industries they were trading and the current going-ons in the market. They were all big market geeks. So I have to wonder if their edge was really their knowledge of the market and the intuition that they built from that, rather than what they thought they saw on the chart. They just weren't consciously aware of it because, again, they were working completely off of intuition. This might also explain why some people seem to develop that intuition and some people don't. Number 4, walk before you run. One of the issues that you'll run into when developing intuition is that there are some lessons that are so strong that they overpower everything else in your model. Maybe you've experienced this in your own life, like other things seem less important after you discover girls. Or let's put it back into the machine learning context. The order of the data that you ingest matters. So you really want to have a solid base before you start introducing those other factors into your trading. And the one that will really kill you is leverage and risk. Taking on additional risk and leverage can really amp up your trading results. So much so that it becomes hard to see anything else. Once you've caught that trend day in, yes, you won't want to do anything else, or you'll always be looking for that big reversal. I bet you guys probably know some traders on YouTube like this. They're addicted to taking big risks and always stuck in this cycle where they build the account up and then they blow it all at once. And because they feel like they had success in the past, they won't listen to anyone that tries to help them. What has happened is their intuition has overfitted to taking on risk, and so they get caught in this trap over and over and over again. That's why for beginners, I strongly recommend keeping things to an equal risk reward for short-term trades. I wouldn't recommend set stops and targets, which is maybe a subject for our next video, but you should shoot for your average loser and your average winner to be about equal. That will give you the best, most immediate feedback from markets to help your brain build that intuition. And I would even recommend sticking to that for several years. Wait until you really feel you have the full picture of the markets before amping things up with risk. Number 5, challenging yourself. So taking on specific challenges can really help speed up your learning. This is another tactic that I've taken inspiration from how machine learning networks are trained. One of the strategies they'll use is they'll take a developed network and then block half of that network off. It forces the network to become more efficient with the parts that are still available. Then when you add the rest of the network back in, you have an even more effective model. Order flow drills are really helpful here. Like, try just catching the edge and taking a 1-tick profit for a week. For a higher time frame exercise, try just predicting whether your market will be up or down during your session at the very beginning of your session. You could also try to predict how the market will react to the next economic release, like create multiple scenarios, what you think it will do if we're over expectations and under expectations. You're developing small skills that once integrated back into the larger whole, make you more efficient. Okay, I think we're at number 6. It takes time. A really common question from beginners is, how long did it take you? And the answer is almost certainly longer than you think. It wasn't until I had been trading futures for 5 years until I really felt that I had all of the pieces for a truly cohesive strategy. There are potential edges in markets, but the noise is louder than the signal. So in order to filter the noise out, you need a ton of data. So play the long game and anticipate that it will take several years before you see any real reward for your efforts. Don't be deterred by seeing other people on YouTube posting these big numbers in their thumbnails that they're making so much money. Those are usually the guys that are taking on too much risk and are going to blow up next. Number 7, learn with others. My biggest edge is the community that we've built on this channel. We would not have all of the quality information that we have here without a dedicated community sharing information with each other every day. There is just too much ground to tread for one person, and watching others will help you build your own intuition. We are very much social learners. That's why I run a morning live stream. There, we're helping you build that market intuition one day at a time by using the live market as an example. What matters today might be different tomorrow. It's all situation specific, and there's really not one source you can go to get everything. So being able to watch how multiple people look and interpret the market day after day is extremely valuable, especially when it's backed up with empirical information like we focus on here at our community. And you know, if my voice is too distracting to listen to while you're trading, I totally get it. We also have a Discord, which is a really useful resource. It's a great place to meet like-minded traders, and I know many successful groups that have spawned off after first meeting on our Discord. If I were really to summarize everything I've said in this video though, I would say use your resources wisely. We often come into this with the idea that all we have to do is try new ideas until something sticks. The problem is that there's just too many ideas out there to go through all of them, and there's a cost to that, which is why most traders never find something that works. I wish all I had to do to make you a successful trader was wave a magic wand, but of course it's not that simple. However, there is one thing I can give you that without question will give you the best chance at succeeding in this game. Build your intuition using empirical backing. I've used that word a ton in this video already. What does that mean? Empirical means like data about the market that anyone can verify is true. So it's not just this one guy tried it and he had some success with that. That is anecdotal. Empirical evidence means that anybody can look at that data and confirm it. Empirical evidence is the most important filter that we have because it actually gives us a chance at sorting through all of that information with the time that we have. And that's really at its heart what discretionary trading is doing, collecting empirical information and then incorporating those findings into our intuition. And if you follow this process, you really will have those magical traits. You hear something on the news squawk or maybe read something on Twitter and just immediately know what you have to do. So now you know how to learn how to trade. Get to work. I'll see you guys in the next live stream. And in the meantime, stay excellent, team.